Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks edge higher, with US officials striking a positive tone as trade talks with China enter day 2 here in London. Deepening tensions, the Trump administration sends hundreds of Marines to Los Angeles in response to protests. California's governor calls the move reckless. Plus, Apple plays catch up. Investors give a lukewarm response as the annual developers conference fails to ease concerns over the tech giant's AI offering. Happy Tuesday. So markets looking for the next catalysts. Will it be the US-China trade talks? Will it be inflation data that drop on Wednesday? Or will it be something else? So far, European futures looking to take the baton from Asia, where we've had a decent session, pointing higher by 0.1%. The FTSE 100 looking to add around 12 points at 8,847. S&P futures having crossed through that 6,000 level, and modest gains yesterday of around 0.2%. Look to build on that today with gains of 0.3%. And it comes to the S&P E-minis, watching the talks, of course, taking place in London. Nasdaq 100 futures pointed to gains of 98 points, up 0.4%, despite the disappointment around Apple, which ended the day down 1.2%. Let's flip the board and have a look cross-asset then. A bit of stability in the Treasury markets. We'll see how long that holds, given the inflation data on Wednesday, and then importantly, of course, for the Treasury markets, that 30-year auction later this week, which will be scrutinised in terms of the demand that we see. 447 on the benchmark 10-year, largely unchanged in the session today. Euro-dollar at 113, down 0.2%, largely on dollar strength. Brent at $67 a barrel, currently up 0.3% on oil, and gold at 3,308, down 0.5%. Worth noting as well that Bitcoin is gaining close to record highs. The last time I checked, around 110,000 per coin. Let's check in on the Asian markets right now. Avril Hong standing by in Singapore. Avril.
Yeah, Tom, we're seeing Asia shares running higher today. There seems to be enough US-China trade talk optimism to go around. The region's benchmark is roughly at session highs, and we're seeing Taiwan leading the gains today. The big boost for the region's benchmark is TSMC ahead of the release of its May sales data, but it's also seemingly benefiting from optimism that the US could relax some of these chip restrictions. So the stock is at roughly the highest since February. Now, aside from that, we're also seeing optimism growing towards Chinese shares. Whether you're looking at a gauge of Chinese shares in Hong Kong or the MSCI China, they're roughly 20% higher than the April lows, and investors seem to be betting on the tech revival as well as advancements in biotech. So those are the sectors that are sort of been doing well and fueling the gains. Now, flip the board before I get a bit more into these Chinese shares. Let's take a look at dollar yen, because we heard from BOJ Governor Kazuo Ueda speaking in Parliament today, and to some, his comments about not being there yet on inflation sound dovish, but if you kind of pass it a bit further, he's saying that the neutral rate is not 0.5%, which is, of course, where the policy rate is at the moment, actually reads dovish. So you might then ask, why are we seeing this pop on dollar yen towards the 145.3 handle? Our strategists actually highlight this is the role that options traders are playing, and that they are ramping up demand of dollar yen ahead of a very large strike at 145 that's coming through next week. So that might explain why we see it popping and then falling quite quickly on dollar yen. Now, flip the board. When it comes to Chinese shares, one of the clear signals that we're seeing growing confidence is how the Hang Seng has risen, along with this slide when it comes to the put to call ratio, and it shows you how there's less demand for put options, less need for that protection for Chinese stock losses, all in just feeding to some of that optimism amid these US-China trade talks and the gains that we're seeing overall in Chinese shares.
OK, that optimistic narrative around the trade story being something of a propellant for Chinese shares, as Avril Hong in Singapore was describing for us. And we'll see if the details lead to further support, because those trade talks, of course, continue today between the US and China. In a second day here in London, as the two sides look to ease tensions over shipments of technology and rare earth elements. President Trump touting the progress so far.
We are doing well with China. China's not easy. We want to open up China, and if we don't open up China, maybe we won't do anything, but we want to open up China. It'll be a great thing for China, a great thing for the rest of the world.
Well, Bloomberg's Lizzie Burton has been tracking the negotiations and joins us now for more. What progress then, Lizzie, has been made in the first day of talks?
Well, it's notable that we're going on for a second day and we're starting at 10 a.m. here in London, back at Lancaster House, which notably was the same place where you had those UK-EU talks just a few weeks ago. They went on for about 6 hours, the talks yesterday. This 19th century mansion near Buckingham Palace, you can see it there, the Chinese officials when they were arriving yesterday. And look, we were promised that these talks were going to be short, but that they would bear fruit. And it was significant, wasn't it, that you had the US Commerce Secretary Howard Lutnick there round the table next to the Treasury Secretary Scott Bessent and the US Trade Representative Jameson Greer, because Howard Lutnick is the one who has the authority to grant export controls. And there was this frustration among the Chinese that he'd been absent previously and that they couldn't get into that nitty-gritty detail. So the hope is that actually there's going to be the US easing restrictions on selling chips to China if Beijing speeds up exports of rare earths. And crucially, we're waiting for confirmation of which chip restrictions are going to be lifted, because this has been a long-standing bipartisan issue in US politics, trying to not allow the US to export the most advanced chips to China, as you well know. So what we're expecting is that it'll be a measures targeting chip design software, jet engine parts, also chemical and nuclear materials, but crucially holding on to the most sophisticated Nvidia chips. That's what Kevin Hassett, the White House's National Economic Council head, has said yesterday. We'll wait to hear more detail, but essentially the mood music has been positive out of these talks so far, unwinding a bit of the acrimony that's developed since Geneva.
Yeah, as you say, putting something of a red line around the most sophisticated chips, the H20s and beyond, made by the likes of Nvidia, of course. What is next then? What are you watching for next, Lizzie?
Well, I want to see the handshake moment. It's always an important one, the handshake that will conclude these talks. But, of course, what the market really wants to see is a leader-level meeting between Trump and Xi. And we've been promised that. They had the phone call on Thursday last week, but this is what the market's waiting for. And then the question is, how long will a grand deal take? Because these things don't happen overnight. They don't happen in a matter of days. But look, we've heard from the president saying that things are going well, by all accounts. Bessent telling reporters in London yesterday it was a good meeting. Lutnick saying it was fruitful. I thought it was notable that the Chinese side didn't make a comment to the media on the talks, but China's message really has been consistent. They want to reduce the trade barriers. So let's see what today yields. For the market, though, it seems like as long as things are moving in the right direction, the optimism on markets continues. Yeah,
still the event to watch for these markets. Lizzie Burton, thank you very much indeed, breaking down what to expect then from the second day of talks between the US and China here in London. Meanwhile, the Trump administration has escalated its response to anti-deportation protests in Los Angeles by mobilising some 700 Marines and an additional 2,000 National Guard troops. The move comes as California is suing the administration for deploying the military in the city. The US president backed comments suggesting Governor Gavin Newsom should be arrested. Charlie Wells is here with an update. There's a lot going on, Charlie. So additional military presence on the ground in Los Angeles. In terms of the history, the recent history of the United States, that seems to be largely unprecedented. Give us a sense of the latest then.
Tom, so there have been a lot of words here, and I think a lot of theatrics, but it really is that mobilization of these active duty military personnel, which really stands out here, right? So, you know, there was that 2,000 National Guard troops put under federal control over the weekend, and then we've seen this ratcheting up. So those 700 Marines and then these additional 2,000 National Guard troops. And this is rare, right? So federal law usually bars the deployment of active duty military personnel for domestic law enforcement, but that is what is going on here. And I think just to put this into the context of what's happening, on Monday we saw these protests against ICE raids continue, but largely peacefully. And I think what's really important here, I'm from California, I know you know California well, Los Angeles is an enormous city, right? And so you've seen these protests largely peaceful in pockets of the city, but by some measure, you know, I often tell people LA, depending on how you kind of, calculate it, is some 10 times larger than Greater London in area. So it's really important to just kind of put the size and scope of this out there.
Yeah, it's a huge, sprawling city, and only small parts are so far affected by these protests, which, as you say, have been peaceful in the last day or so, at least. What the governor of California, again, fifth, sixth largest economy in the world, Gavin Newsom, taking on the Trump administration, just rhetorically, but also in the courts. What is he hoping to achieve? What can California achieve? What can the governor achieve?
Yeah, so basically in this 22-page complaint, the California is basically filing this lawsuit asking for a federal court to bar the deployment of the state National Guard. And this really gets at a couple of issues. And really, the National Guard is a unique branch of the military because it has state competencies, but also federal. It's usually under the control of the state government, of the governor, but there are certain circumstances where the federal government can step in and deploy these troops. And this is really what this lawsuit is getting at. So California is effectively saying that there's not enough evidence for the president to be able to take control, for the federal government to be able to take control of these National Guard troops, and also arguing that this is a violation of the U.S. Constitution, of the 10th Amendment, which really reserves rights that are not expressly kind of given to the federal government, to the state government. And, the Trump administration would argue here that this is necessary to maintain order. This is one of the circumstances where the federal government could step in and take control of these National Guard troops. But this is incredibly rare, right? So this has not happened since 1992 in the LA riots back then, and that was with the consent of the state government. But this has not happened without the consent of the state government since the 1960s. Since the
1960s. In terms of what is underscoring this tension and what we're seeing on the ground in Los Angeles, part of it, of course, is the Trump administration's pretty hard-nosed look at their immigration policy and determination to pursue that with some level, it seems, of aggression, some would say. There's also, of course, the question of the tension between two individuals, and that is the California governor and the president himself, and the symbolism that is involving and enwrapping all of this. How does this tension between these two men evolve from here? How central is that to how this story moves forward?
It is certainly a conflict between personalities, and I think if we want to think about conflicts between personalities, if we rewind just a few days to last week, there was another major conflict between personalities, but it was between two personalities on the American right, so Elon Musk and Donald Trump. That kind of internecine battle does not play well for Republican politicians because it is a kind of right-on-right battle. This is a sort of much more natural conflict between someone in the Democratic Party and someone in the Republican Party, and this plays well into the hand of Donald Trump. So we know from a political side that this is something that, he would see as a benefit to kind of play into his base, but also it gets at this issue of immigration, which, of course, the Trump base also is incredibly concerned about. So I think we're likely to see a lot of this rhetoric continue. As far as what happens on the ground, I think if there is some kind of escalation between, say, the military and the protesters, that could kind of amplify what's going on. But at least right now, it's not looking like that could happen.
Charlie Wells, thank you very much indeed with the latest when it comes to those protests in Los Angeles and, of course, the federal government's response. Here's what else to think about. Today, 7 a.m. UK time, we're going to get the jobs data. We'll break that for you, of course, live in focus, of course, wages as well. The Bank of England now forecast to cut a little fewer than 2 additional times this year, so markets may be readjusting their views on the BOE. We'll see how that evolves, of course, that story with the data dropping at 7 a.m. UK time. At 8:10 a.m, the ECB's Villeroy will speak at the Europlace conference in Paris, so we'll listen in to the central bank governor of France and, of course, a member of the governing council of the ECB to give his views on the next steps for the European Central Bank, with inflation below that 2% target for the ECB, at least on a headline level. And at 11 a.m, we get the US small business optimism gauge, so another test there of the health of the US economy. We'll break that for you as well and give you the context. You can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB Go. Coming up, we're going to dig into what is going on in the markets. What is the next catalysts for these markets? With the S&P 500 up around 2% year to date, the Stock 600 up around 9%. That divergence is there. Will it continue? Sunaina Haldea from Raymond James joins us after the break. And a little later in the programme, Apple unveils a complete software redesign. But a lack of AI developments leaves investors wary. We're going to bring you the details. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, S&P futures are higher today as US officials strike positive tone after the first day of trade talks with China. The second day, of course, underway at 10 a.m. UK time here in London. With me now for more views on these markets is Sunaina Haldea, Global Head of Private Capital Advisory at Raymond James. Sunaina, thanks so much for coming into the studio. What is the next catalyst for these markets then? The S&P 500 up about 2% year to date. The Stock 600 up about 9%. What moves things forward from here?
Well, I think this fall into two buckets. The first is news flow, and the second is the real market economic reality catching up to all that's happened in the past quarter. And we haven't seen that shoe drop yet. What do I mean by that? I'll come to that. On the first hand, we need to see where all these trade deals are going to come out. Where does China-US trade talks this week land? But beyond that, what happens to the big, beautiful bill when it goes for the Senate vote? What happens July 9th when the tariff interim deal expires? Those are all three are near-term catalysts that will move markets and can move markets meaningfully. In the second bucket, markets are still catching up to what happened at Liberation Day and after Liberation Day. So we've just seen the May jobs data out of the US. We're waiting for some jobs data out of the UK. But the reality is that you've had a lot of stockpiling of inventories. That stockpiling will run out in June, July, depending on the retailer you look at. How that flows through into real-term economic data, cost of goods and so forth, that story is yet to be told, and I think that will be a major catalyst for markets in the summer months as well.
So the inflation risks are still there for the US economy. Are the growth risks still there as well?
Very much, both inflation and growth, because we don't know how the tariff story unfolds. It could go either way. I think markets in general, Tom, are pricing in too much optimism that there will be deals. Now, we all hope that there will be deals that come out in a good landing place, but we cannot be sure.
It's the quality of deal, it's the type of deal, isn't it?
Quality and timing.
As we saw from the UK-US deal, on a headline basis, some respite, but the details still need to be implemented.
Details need to be implemented, and the impact, the sheer size of that deal is completely uncertain in terms of market and economic impact.
On the yield story, we have the 30-year auction later this week. Curve steepening across the Treasury curve is something that's become almost kind of consensus as a view now. Do you align with that you get a further sell-off at the long end, maybe a bit of money moving into the front end on expectations about lower rates? How do you see the curve steepening story evolving and the importance of that 30-year auction later this week?
It's incredibly important because we've seen that the only thing that can help impact policy decisions is the bond market. The bond market will tame the reactions of policymakers here. And I think the bond market is a signal that it's no longer scot-free to be able to raise unlimited amounts of debt without a view towards the deficit. So I think that 30-year auction this week in particular will be a harbinger of things to come, especially with respect to this bill that we're seeing in the US market.
You look at other asset classes as well. Private equity sits in your focus. What is that sector telling you? What are the moves within private equity telling you about some of the strains in the market right now?
There's two big headlines in private equity. Liquidity, i.e. exits, private market assets, almost $3 trillion worth, need to be sold at some point because private equity works on a clock. And the second one is, if you think about what's happening in the M&A market and so forth, what happens at the institutional investor level? I'm thinking in particular about endowments, which have been a huge source of inflow into private equity, now facing pressures. The university model in the U.S. under tremendous pressure because of tax increases, because of a cutting of funding towards them. They've been a big inflow into venture, into tech, and so forth. And yet, at the same time, you've had the whole loop of distributions from private equity, especially venture, but also buyouts and others, really slow down in 2025 as we've seen some of these economic gyrations play through. That endowment model is something we're watching very carefully in terms of liquidity sales that these endowments may need to generate to keep themselves flush for what's to come.
given some of the concerns, or given at least that you think markets are pricing a little bit too much optimism, at least on the trade front right now, and you're concerned about what happens as that story evolves in the US around inflation and growth, where would you want to be sitting? Where should investors be looking maybe for some shelter, an environment where you think maybe things have run a little too far?
I think the first opportunity set will be to look at domestic champions who are not reliant on trade-related impacts. So European small and mid-cap, a great place to sit. If you think about stocks, is up about 8% year-to-date. And there's both sector-wide but also idiosyncratic plays in that, in those European small and mid-market leaders, I think, to focus on. Beyond that, diversification is king. So thinking about different asset classes, but thinking about them in a very diversified way so you don't have any concentration anywhere.
How are you feeling about UK assets at this point? Are we underestimating the ability for this UK economy to remain resilient?
I think we're definitely underestimating it, but by how much is the question? I think that story is yet to be told. We're seeing some positive green shoots appear. Will I go long the UK? Absolutely, but will I go long it in size in my personal portfolio? No, I wouldn't go long any one market versus the other, with the exception of any domestic stories. So companies that have revenue that's accessible in the domestic markets, small and mid-market in Europe and UK, that's the place to be on a relative value basis.
OK, there you go. Small and mid-market in Europe is your focus in an environment where maybe broadly, markets are getting a little over-optimistic about the trade developments that we continue to watch, of course, here in London. Sunaina, Haldea, Global Head of Private Capital Advisory at Raymond James. Thank you very much indeed. Coming up later, can AI be energy efficient? We're going to discuss that with Rodrigo Liang, the CEO of Samba Nova Systems, a rival to Nvidia. That's coming up. This is Bloomberg.
Tech is integrated into every aspect of our lives, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers, and the politics that shape global tech markets. I'm Tom Mackenzie in London. Watch the new Bloomberg Tech Europe. Premieres June 13th, only on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe. Now to some other stories making the news this Tuesday. Thames Water's senior creditors have put forward a rescue plan that includes £5 billion of fresh funds and significant debt write-downs. Britain's largest water company has nearly £20 billion of debt, with preferred bidder KKR walking away from a rescue plan last week. The latest proposal includes £3 billion in new equity and £2 billion of fresh debt. The UK government has given the go-ahead for a £14 billion investment in the Sizewell C nuclear power station in Suffolk in eastern England. The project has already been in the planning for more than a decade. With the private sector expected to contribute more than half of the likely price tag of over £40 billion. Bloomberg has learned that Barclays is preparing to cut over 200 investment banking jobs. Sources say staff in global markets and research may be impacted, with managing directors the most senior roles affected. The move is meant to give the bank more capacity to invest in priority areas such as European rates, equity derivatives and securitized product trading. And UK retail sales recorded their slowest growth in 6 months as higher prices and household bills squeeze budgets. The British Retail Consortium says sales rose 1% year-on-year, driven by a 3.6% rise in food sales. That's the smallest overall gain since November, when sales declined. Coming up, Russia unleashes a massive drone attack on Kyiv and Odesa after a major prisoner swap transferred a first group of soldiers. More details on that conflict next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. US officials strike a positive tone as trade talks with China enter day 2. Stocks in Asia pair earlier gains. Deepening tensions, the Trump administration sends hundreds of Marines to Los Angeles in response to protests. California's governor calls the move reckless. Plus, Apple plays catch-up. Investors give a lukewarm response as the annual developers conference fails to ease concerns over the tech giant's AI offering. Let's get to the markets then, where sentiment has turned in the last 30 minutes. We started off on the front foot in terms of these European and US futures. That has now been wiped out. We're trying to find out what exactly is driving the downturn that we're starting to see. There had been that optimism, given that trade talks day 1 seem to, according to the comments from US officials, have moved in the right direction. Day 2 starts, of course, today in London. But right now, European futures are off by 0.3%, as you can see. FTSE 100 futures also lower by 11 points. S&P futures stateside, having been in positive territory, now down 0.1% after some modest gains of around 0.2 by the end of the close yesterday. Nasdaq 100 futures also down 37 points. Let's flip the board and have a look cross-asset. There's still relative stability in the Treasury markets as we lead up to that 30-year bond auction, a crucial test, of course, of demand for the long end when it comes to US Treasuries later this week. The benchmark is at 446 then. Euro dollar at 114. The dollar is up, euro down on the back of that, down 0.1%. Brent crude is also a little higher by 0.1% at $67 a barrel. And gold is falling 0.4% so far in the session, with the yellow metal at 3,313. So a bit of a turn in sentiment broadly across these markets. We're getting some lines now in terms of TSMC on sales and year-to-date sales, of course, for the maker of this equipment and hardware, of course, in terms of semiconductors and data center kit. TSMC year-to-date sales increasing year-on-year 42.6%. You're looking in terms of Taiwanese dollars, year-to-date sales of 1.5 trillion Taiwanese dollars. Monthly sales year-on-year up around 40%. The stock TSMC is up, well, in fact, it's down about 2% year-to-date. So we'll continue to watch the reaction around TSMC with an update there in terms of its sales numbers. Of course, it's also in the crosshairs of the US-China tensions as well around access to some of this AI hardware. To a different geopolitical story right now, because Ukrainian authorities say Russia launched almost 500 drones in a sweeping attack on Kyiv and the Black Sea city of Odesa. This comes after the two sides started a major prisoner exchange with the first transfers underway. Joining me now is Bloomberg senior editor Bill Ferries. Bill, what is the latest on what seems to be another sizable attack by Russia, and what does it tell us about what seem like pretty distant prospects of any peace talks between the two sides?
Yeah, Ukrainian officials saying that nearly 500 drones were launched against Kyiv and Odesa overnight. And that many of them were shot down or jammed, but one person is killed and a number of buildings, including apartment buildings, have been hit. The attack was going on for over 5 hours, according to people on the ground there. And what is it? It tells us about the peace plan. You know, there's still no next round of peace talks scheduled. We've had 2 rounds so far. They have agreed at those sessions to prisoner exchanges, but very little else has been reached. Russia has continued to issue demands that Ukraine has found unacceptable. Ukraine has continued to push for an unconditional ceasefire, and Russia has not been able or not wanted to accept that. So a real standoff there, and not clear that the U.S. is going to remain deeply engaged. So the drone attacks continue. I should mention that over the last 3 or 4 weeks, we've seen really some of the largest drone attacks on Ukraine that we've seen in the entire conflict so far.
Bill, what do we read into the prisoner swap?
That seems to be just about the only area of agreement between these two sides. Officials talking about potentially up to 1,200 prisoners being swapped. Right now, the focus has been on the younger soldiers getting released from both sides. We're talking about soldiers under the age of 25. Part of the agreement they reached at the last round of peace talks was that they would extend the prisoner release to include those who have been severely injured, and as well as the dead from both sides. That's potentially thousands of soldiers from both sides who have already been killed, whose bodies would be released to their home countries. So that is one thing that is continuing, although probably at a slower pace than negotiators expected when they reached that agreement in Turkey just a couple weeks ago.
OK, Bloomberg's Bill Ferries, thank you for that update on Ukraine, Russia, and another significant bombardment by Russia. Right, now to some other stories making the news today. The UN nuclear watchdog says Iran's stockpile of enriched uranium cannot be ignored and urged nations not to turn a blind eye. The warning comes as the IAEA's Board of Governors meet this week in Vienna. The agency reported last month that Iran's inventory of close to weapons-grade uranium is at record levels, growing by 50% in the last 3 months. Iran announced overnight that the next round of US nuclear talks is set for this Sunday in Oman. The US Health Secretary, Robert F. Kennedy Jr., is removing a panel of outside advisors that make vaccine recommendations to the federal government. In an op-ed for the Wall Street Journal, Kennedy said that without removing the current members, the Trump administration would not have been able to appoint a majority of new members until 2028. The Bank of Spain has lowered its growth forecast for this year, citing a high economic uncertainty because of US trade policy. It now expects Spain's economy to grow 2.4% in 2025, down from the 2.7% it predicted in March. Spanish growth is still expected to outpace the euro area average thanks to tourism, consulting, lower energy prices and migration. And Apple has unveiled its most sweeping software redesign yet and big updates to its operating systems at its worldwide developers conference. But it failed to impress investors who were looking for more announcements on the AI front.
As we've shared, we're continuing our work to deliver the features that make Siri even more personal. This work needed more time to reach our high-quality bar, and we look forward to sharing more about it in the coming year.
OK, Matt Bloxham from Bloomberg Intelligence Analyst, of course, joining us. And you were previewing this story for us yesterday. You, of course, were watching developments at a Cupertino yesterday. What kind of stood out to you? What were the highlights? There's this market disappointment around a lack of AI focus. But in terms of what did come out yesterday, what kind of stood out to you?
Yeah, I mean, I guess the big showpiece was the new look and feel for the operating system, which will be rolled out in the autumn, I guess, to coincide with the launch of the next round of phones, the iPhone 17. I mean, it is pretty slick. I think overall the way your phone works will be pretty much the same, but the look and feel of it, how a lot of the menus work, is given a significant upgrade. I think it's a kind of refresh that kind of consumers will appreciate. And then lots of kind of little AI features here and there. For example, you can now do live translations in text messaging, which I think will be a helpful feature for people, and adding some kind of long asked for features, for example, being able to do things like polls within your kind of group chats, kind of mimicking what's been on WhatsApp for quite some time now. So quite a few catch-up features, quite a lot of features in the overall environment that consumers have been asking for quite some time.
Yeah, that's kind of the narrative, isn't it? Catch-up features, not something that Apple necessarily wants to hang its hat on in terms of how people think about the company. Will it be enough to really shift demand for iPhones, which has kind of stagnated? Yeah. I doubt it. I don't think we're going to suddenly see a big shift of Android users into Apple on the back of this. I think, the Apple user base is incredibly loyal. So I think this is going to continue to kind of reward that loyalty, if you like, with high quality incremental upgrades. I think that combined with the iPhone 17, which could include a kind of very thin device to sit in the middle of the range, will be enough to kind of probably sustain demand, but maybe not push it higher. And I think the big issue that Apple has to play with
is, given all the tariffs, there's a good chance they have to increase prices across their lineup with the 17, and so they really need, customers to be impressed by this to kind of feel that extra dollars are coming through in terms of features and the form of the phone.
OK, Matt Block, some excellent analysis, of course, from Bloomberg Intelligence on what we've been seeing in terms of the latest unveils coming through from Apple. That conference, of course, continuing today. Now, to the gaming space, staying on tech but focusing on gaming right now. The chief executive of the Finnish gaming company Supercell has told me that he sees AI as a superpower for the creatives in his company. The maker of games including Haldea and Clash of Clans enjoyed a record year in 2024. I asked CEO Ilkka Paananen whether he expects that to continue.
Last year was, as you said, was a record year for us, in so many different respects. The amount of players, revenue, etc., and we saw almost an 80% annual growth, which was of course exceptional. So obviously, for companies at our scale, those type of things don't happen every year. So we shouldn't expect that to be the norm. But that said, we are super excited about this year also. So there's a great momentum in many of our live games, and we are also excited about the new games that we have in our pipeline.
Is it harder to create gaming hits in today's environment than it was maybe 5 or even 10 years ago?
It absolutely is harder. The level of competition for people's free time is just so much tougher. And not only are we competing against our games, but then they are also competing against other forms of media, social media, streaming videos, streaming music, etc., etc.
What is AI doing for game development and the way that people consume games?
Well, how we think about AI is that, we believe that it gives our creative people superpowers. So we believe that, humans will continue to direct the game's vision, and they're going to be this creative force. But what AI enables developers to do, and particularly the small teams that we have, it just enables them to have a bigger impact. It enables them to do more and better for our players.
That you're invested in substantially by Tencent. Happy with them as partners? Is geopolitics proving a testing kind of time in terms of that ownership structure?
No, we're extremely happy with Tencent as a partner. They are this very patient partner with a very long-term view, and obviously they know games super well. So we actually get a lot of value add from them, and also because of them we can also do more business in China.
Does it put a target on your back when you think about the politics of Washington, the politics of the US?
No, I don't really think about it that way. And the primary reason why I think that way is that we're still completely operationally independent. So basically, we run the company as we have always done, and Tencent is just a supporting partner on this sort of a background.
OK, Ilkka Paananen, CEO of Supercell, speaking to me at London Tech Week. You can catch more of that interview in Bloomberg Tech Europe, which launches this Friday, 6:30 a.m. London time. Coming up, we're going to discuss whether it is possible to make AI more energy efficient, and we'll be joined by the CEO of Samba Nova, a rival to Nvidia. That is next. This is Bloomberg.
Is in a Goldilocks circumstance. Between these two ideas that you're rich with great computer scientists, it's a fantastic place for VCs to invest, the ecosystem is really perfect for takeoff.
The Nvidia CEO, of course, Jensen Huang, speaking at the opening of London Tech Week yesterday, I should say. Earlier this year, the UK government announced plans for an AI Energy Council to ensure Britain's energy infrastructure can cope with the demands of AI. It's a big ask, of course, for the UK. The International Energy Agency predicts that electricity consumption by data centres will more than double by 2030. Joining me now to discuss how we can make AI more energy efficient is Rodrigo Liang, co-founder and CEO of Samba Nova Systems. It competes with the likes of Grok, with Nvidia as well, backed by the likes of BlackRock as well. Executive chair, interestingly, is the CEO of Intel, so it has deep pedigree and expertise, of course, within this company. Rodrigo, talk to us about energy as a bottleneck for the development of AI. The Prime Minister yesterday was leaning into this AI revolution. He says the UK wants the UK to be a maker, not a taker of AI. And Jensen Huang's saying we've got all the ingredients apart from infrastructure. And within infrastructure, we think of energy. We have very high energy costs here. Is that going to constrain our ambitions?
Yeah, I mean, I think we're seeing this now that with AI over the last year, the energy consumption in these data centers have gone through the roof. And so if you actually look at data centers that existed over the last 20 years, most of them don't have enough power to support the AI technologies of the future. And so you're having to actually make these investments that allow us to actually allow AI to scale. And so it's something that we're all thinking about, right? Not just about how to produce enough energy to support it, but then all the sustainability questions that we're all very concerned about, that how are we going to deal with this as AI continues to grow.
What does that mean in terms of the demand that you're seeing for Samba Nova products, the hardware and the software, as you push out to the back end of 2025? Are you winning that argument?
Yeah, well, what you're seeing now is worlds going from training these models to now using them in production. And so that's called inferencing. And so as you get into inferencing, this is where people are starting to see the ROI for AI, right? And so, but in order to scale, you need to be efficient. You need to be cost efficient. You need to be energy efficient. You need to be space efficient. And so for Samba Nova, we focus on technology that's very, very efficient, allows you to actually use a tenth of the power and generate 10x the performance of a traditional legacy infrastructure. And so we're really excited about that.
And there is always a big scrutiny, it has been in recent years, about that demand and whether demand is still holding up for some of these AI solutions and the hardware that underpins it. Are you seeing any softening of demand at all?
Not at all. I think you're seeing actually more and more people engage. And so it used to be that AI was only for the largest 20 big tech companies in the world. And now you're seeing a broad use, both geographically, and we see it in Europe, you see it in the Middle East, and you see it in Asia, where people are starting to embrace technology and then start working them into your workflows. But you were just getting started. We're just getting started.
Are you seeing, look, this is, Nvidia is dominating, has what, 90% market share, particularly when it comes to the chips for the training of the models. You're now talking about the use case, the inference. Are you starting to see clients of yours saying, you know what, we're going to push back on Nvidia, we're going to rip out Nvidia systems and replace them with Samba Nova? How is that conversation evolving? Are you really starting to take market share from Nvidia?
Yeah, well, one of the really great things about these models is now it's actually aligned on this open source layer. So you look at these models like DeepSeek and Llama and Quen and all these great models, Mistral in Europe, all these open source models, they're done on an open source standard. And so companies like Samba Nova, we can come in and take models that were trained previously on Nvidia, and you can quickly deploy on Samba Nova to get that 10x efficiency and a boost in performance. And so we're really excited about this next phase of AI because it's going to democratize it. It's going to make it easy for anybody that has a model already there, download it, use it, and not have to invest tons and tons of effort actually building these models themselves.
And to be clear, it's less the training and it's more the use case. It's more the inference. That's where you see yourselves at Samba Nova winning.
That's right. I think, look, the world's going to be going forward. It's going to steady state at 90+% inferencing, because that's when people use the models. That's where your ROI comes from. And so Samba Nova, we're very focused on enterprises, taking their private data and using that in conjunction with AI. And so if you're an enterprise really concerned about data privacy and security and you have energy constraints, that's where we fit. We come in, we take your private data, we roll these machines into your secure private environment. In existing data centers, you don't have to go build a gigawatt data center, and you can deploy your AI technology knowing that your data is safe, your data is secure, it's all under your control.
Rodrigo, do you think Europe has lost the AI race?
No, the race is just starting. Now, look, I do think that there's some catch-up between different regions, as between the U.S. and the Middle East and Asia. There's some catch-up in some regions, but it's great to see the announcement yesterday. With the investments that are being made, you do need infrastructure. You do need to actually educate people on how to start doing the change management. You do need to get your data sets all ready, and that takes time. And so it's great to see that investment coming in because that kicks off this whole activity that allows you to start bringing in AI on an everyday basis.
Biggest growth markets for you outside of the US right now?
doing a lot in the Middle East. Japan's a growth area for us. We're hoping that we can start seeing a lot more growth in this area, and excited to see with London Tech Week this week and a couple other things that's happening in the region. We're excited to see if we can kind of get that going over here as well.
Listen, I mentioned in the intro that your executive chair is none other than Lip-Bu Tan, of course, the CEO, the relatively new CEO of Intel.
Yeah.
Is there a potential partnership there, Intel and Samba Nova? Do you become an acquisition target? What's the play?
Well, that you have to talk to Intel about. But look, Lip-Bu's been a great friend. He was a very early investor now. He was executive chairman for the company and continues to be a chairman of Samba Nova. But look, it's great to have these luminaries be part of the company. You got Lip-Bu. We got a host of really, really great investors that have come together, and that's what it takes. That's what it takes to build a company that allows you to create technology of this scale. And so we're really excited about that partnership.
Just broadly on geopolitics, are you getting any sense from your clients in Europe that they're concerned about adopting US tech, given the tensions between Washington and Brussels? Is that something that comes up in conversations at all?
Not too much. I mean, what we see is people want optionality, and so whether that's using Nvidia chips or using Samba Nova infrastructure, people are looking for options. And so I think what's more important is to make sure that you're not single-sourced. We've lived that a few years ago, where supply chain issues and you couldn't get enough material. And so people are very concerned about making sure that when they invest in multiple platforms, multiple vendors. And so we're more than happy to be able to provide optionality to the customers.
Rodrigo, thank you very much for coming into the studio bright and early. Of course, the CEO, Rodrigo Liang, CEO and co-founder of Samba Nova Systems, playing in the inference space with a focus, of course, on speed and energy efficiency when it comes to the infrastructure and the software, the hardware and the software for some of those AI solutions. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Checking in on Bitcoin, because this may have sneaked up on you in recent days, grinding closer to those record highs of a little over $111,000 per coin. You can see the blue line is the moves around Bitcoin since April. It's up between 15 and 20%. In fact, I can tell you exactly 15% year to date. In the last 12 months, Bitcoin is up about 60%. But it's really aligned in terms of the moves with the Stock 600 and the MSCI Asia Pacific Index, which is the yellow line here. So rather moving in tandem in terms of the upside that's come through. Again, Bitcoin, the blue line, closing in on record highs of around 111,000 per coin. Some of the regulatory changes seem favourable stateside, as well as that general risk-on sentiment that we've seen, of course, evolving across these markets in the last couple of weeks. Let's check in on what to expect from the UK. Switching focus to the wage data that drops at 7 a.m. So what, in about 4 minutes' time, the opening trade team will be breaking that for you. There's a focus on how this story evolves, of course, given that markets have started to pair their expectations for the Bank of England. Just around 42 basis points priced in now by the BOE. We'll see what the wage data does. Expected to cool, at least in terms of weekly earnings, ex-bonuses, to around 5.3% from 5.6%. The first additional cut, I should say, the next additional cut from the BOE, not priced in, fully priced until either September or November. The markets are split on that question. Here are the kind of moves that you see when it comes to the Apple story, and of course that conference continues in Cupertino. The moves that you see around this event, historically going back to 1997 when Steve Jobs came back as an advisor, those moves can be pretty significant. Apple ended down 1.2% yesterday on disappointment about AI. We'll see how that story, if there's more colour there on the AI picture for Apple. There's plenty more coming up. This is Bloomberg.